cutting inflation down to size has taken years, and it's still not quite where it needs to be. It's because many businesses, like this tree lopping company, struggle to absorb growing wages and insurance premiums, and instead pass increased costs onto customers through higher prices.
People still feel pain, and they've still got their financial pressures, so it's about being respectful to people and understanding that they've still got their bills to pay, they've got the set bills to pay.
And based on official data, those cost pressures look set to remain. Bureau of Statistics data show annual headline inflation in the 3 months to September was 3.2%, while underlying or core inflation was 3%. Economists have their eyes on a number of items in the household shopping basket that continue to push higher.
Definitely electricity costs. We are all aware how much of electricity prices are actually contained by the subsidies that the government is offering, but electricity prices are something that we need to be cautious about. On the services side, of course, all the industries which are very closely tied up to the labour market still continue to have a bit of an issue from the skill gap point of view, from the productivity point of view.
Call to the Treasurer.
The Treasurer, choosing his words carefully, acknowledging businesses and households remain under pressure.
We have made it clear that we want to make more progress on inflation. We've made it very clear that progress often isn't in a straight line, as we've seen around the world. We know that there's more work to do, and that's our focus.
Inflation is now no longer comfortably within the Reserve Bank's target band of between 2 and 3%. Economists say it closes the door on a Reserve Bank interest rate cut on Melbourne Cup Day. We can safely rule out a Melbourne Cup rate cut now.
That's not happening. That's not happening. I don't think anyone really looks at the RBA meeting on Melbourne Cup Day anyway. So there's even going to be lesser interest this time now that inflation data has thrown the cut out of the window.
That's despite the latest official jobs data showing an unexpected spike in the unemployment rate.
The higher than expected unemployment rate does create a bit of a tricky situation for the bank. They're having to balance this hotter inflation along with the higher unemployment rate. But taken together, I think the bank's pretty willing to look through the faster rate in unemployment.
Arborist Julian Parry says he thinks his customers may now prioritise emergency tree work over landscaping.
With each interest rate hike or cut, I do notice people's confidence is affected in that, particularly the week after or 2 weeks after. Everything tends to settle down after that period.
And today, for millions of mortgage borrowers, the change may come with some necessary budget balancing.